We know the Reserve Bank isn't moving on rates for the next few years, but the banks are a different story. Right now, there's some upwards movement with long-term 4 to 5 year fixed rates no longer on offer. Let's bring in Michelle Maynard, finance expert from Carbon Group. Hi, Michelle.
Hi, Mon.
The Commonwealth Bank became the first of the big four to do this. Smaller lenders also moving. Is this the start of something?
I think it is, because not only, like you said, did Commonwealth Bank do this last week, but 5 smaller lenders moved on average 0.2% in their 4 to 5 fixed year rate. And what the banks are saying is, with the Reserve Bank anticipating rates going up in 2023, the cost of borrowing is going to go up in a few years, so they can't maintain this long-term competitive rate. Saying that, 2 to 3 year rates are highly competitive, so if you've missed the boat on the 4 to 5 year rate, you might want to check out fixing your rate for the next 2 to 3 years.
The rock bottom rates are fueling this housing boom that we are currently seeing. If the banks start to move, could this level it out sooner than we expect?
It's definitely a player, because that is one of the contributing factors that has made the property market so hot right now. But it's not the only factor. COVID has thrown a whole range of things into the mix. The government has put huge incentives into the building, construction and housing market, with first homeowners grants, early releases of super and a lot of money flowing out to the economy. So that has really fueled demand for property, which means prices are going up. So if interest rates were to move, I think it would have some impact on the property market, but I don't think it's going to be the killer of the market that a lot of people think it will be.
All right. When could we see the banks move on variable home loan rates, independent of the Reserve?
Well, banks are a business and they have their shareholders to answer to, and they really are interested in their bottom line. More and more people are actually fixing their interest rate, which can be of a concern to the bank, because it means that they can't increase their earnings. That interest that they're earning from those rates is fixed. So they may look to variable rates to make up the difference. Basically, what they will do is look at the cost of lending. If they can't make that up with their fixed rates, they may move on variable rates before the Reserve Bank does. The Reserve Bank has said the official rate is not going to move until 2023, but that definitely won't stop banks. We've seen before that they don't really listen to what the Reserve Bank does.
So with this in mind, Michelle, what do people buying property right now in the height of the market need to keep in mind?
They really need to keep in mind that interest rates are low, property values are high, and so they need to plan for what happens once interest rates move. If they've overextended themselves now as they're entering the market, they're going to have to plan to make sure that they've got the money in the bank to make sure that they can afford the interest rate increases. If you fixed your rate, that's a fantastic way of knowing what your repayments are going to be for the long term. But once that repayment fixed repayment period ends, you need to have that extra money in the bank. So put money aside now so you don't get that repayment shock once your fixed period ends.
What about people not in the housing market but who do have a mortgage? Is now the time to fix rates?
Absolutely. This is a once in a lifetime opportunity, Mon, to get this right. Historic interest rates aren't going to be any lower than this. We know that the only way for them to go is up. So if you have a mortgage and you have not contacted your bank in the last 6 months to ask for a rate reduction, you are doing yourself a disservice. If your bank is not going to come to the party, you need to shop around, contact other lenders or a mortgage broker and move. This is the only chance we are probably going to get in our mortgage lifetime to get ahead the way that we can. So make sure you are paying the lowest interest rate possible, but don't change your repayments. That way you are paying more of the principal off and you are getting more equity in your home. People need to do this and they need to do it now, because otherwise once the interest rates start to move, we're going to miss this window, and it means we're going to miss the opportunity to get ahead and pay our mortgage off sooner.
All right, well, the Reserve Bank is having its monthly meeting tomorrow. Michelle, thank you very much for your time today.
Thanks, Mon.